It is Wednesday, November 28th, 2018. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was a very fun get your ass kicked at Jiu-Jitsu Wednesday. I actually did kick a teeny tiny bit of ass. Maybe not as much as I could have, but you know, it was definitely an improvement day. We were doing some escapes from the guillotine, from a multiple of different positions, and honestly, I enjoyed every single one of them. I like the I like getting out of a guillotine in the ways that we were training it, only because all of them seem to lead to much better positions. I was transitioning, like I had this habit to try and transition it to north-south, and I found that if I pulled it just a little bit further around, like if I was able to swap my grip from over one shoulder to the other, that I could navigate my opponent right between my knees and get up in there for that Americana opportunity. So, or no, is that I get confused between Americanas and Kamaras. God damn it. I don't know why. Anyway, point being that we were doing that, and we did a little bit of stuff at the end that it really sticks with me, because it's one of the very few opportunities that I've had to do a single leg takedown where I was able to complete it. I managed to get my opponent down with we were doing, pass keep the guard. And my first opponent was a white belt, and I know I've been saying that I've been trying to shoot for higher belts, but honestly, it was white belts and blue belts today. There was one purple belt, but the rest were all white belts and blue belts. So, you know, I went with whoever I could go with. And so I went with one gentleman who's a white belt, and I was just completely dominant, and I tried to take it slow and not be too aggressive or too harmful or whatnot. But I did concentrate a lot on my actual technique. You know, it's like I would stand up and keep my left hand on his belt, right, pushing down into his gut, and then after I got stood up, have my legs wide enough apart so he couldn't just, you know, hook one ankle, right? So between my arm, giving him the stiff arm, and my legs being wide enough, it wasn't easy for him to just, you know, hook around one of my legs and pull his weight to it. And so then I started the other game where I bent my left knee towards his hip a little bit. You know, I kind of leaned my weight to where I just had most of my weight on my left leg, and it pushed one of his legs to where his knee was up on my hip, and it made it really hard for him to hold his feet together. And then I just slowly popped his foot up, you know, onto my other hip after I disengaged it from his other foot, and just swung it around and got from there. But yeah, it was a lot of fun. But then the next one, I rolled with a blue belt, and this gentleman and I have been rolling on and off together for probably the entire time that I've been training in any kind of jiu-jitsu. So it was really interesting to have an opportunity to train with somebody that's put in. Actually, he's put in a lot more time than I have. I shouldn't say anything about that. But when I say that, I mean he shows up for the 6 a.m. class, okay? Just the 6 a.m. open mat, he's all over it. So anyway, I rolled with him in pass keep, and I think I passed his guard like 4 or 5 times. And then when it was my turn to hold my guard, I managed to retain my guard. I think he passed my guard twice. And then he got past my guard twice, and then one time he was about to pass my guard, but I managed to get my legs wrapped around his right leg and got a koala grip around the back of the hamstring there, and popped up and managed to bring him down into a nice single leg takedown. But anyway, yeah, it was pretty exciting because I hardly ever get one of those. I mean, you know, I like takedowns. You know, I mean, I don't know what it is. I like them. I like them a lot. And so when I actually get one, I feel that much better about it. Like one of the escapes that we were doing from the guillotine included a foot sweep to get the action onto the ground. And like I was saying, my instinct from there, I think, would be to bring my, like, if I swept their left leg out and tripped them right onto their left side, my tendency would be to try and pull them up onto their left side, get a leg in right next to their head on the front, and then swing my other leg over the back of the neck, try to isolate that arm and get that bad boy. I'm pretty sure that's a Kimura. Yeah, I'm pretty sure that's a Kimura. I'm sorry. Armbar. It's not actually an armbar, but there was one available from that perspective as well. But anyway, point being that the tendency for me is, if I'm already swinging my legs around toward a north-south, it's that much less effort, you know, that after I've gotten my inner leg around to where it's like within the vicinity of his head, to just drop it in there, clinch around the head, and yank that arm up and take it to work, you know? It feels like that's like part of the motion, you know what I mean? Anywho, as far as crypto today, holy shit. Verge just went like rocket sauce, man. Look at that fucking chart. I know I don't spend a lot of time talking about prices and market action and all that other stuff, but I mean, it took an impressive jump over the last couple days, and I'm very, very proud. I mean, right now it's number 2 on Bittrex, so that ought to tell you something. Anywho, as far as where we're going to go tonight and what materials we are going to cover, we do have some material. I saw that one thing about, I guess it's the SEC wants to sanction a couple of Bitcoin addresses. You know, if they actually manage to get people to comply with that, they will have officially defeated everything good about Bitcoin. You know, one of the things I was sold on was permissionless. You know, that I wouldn't need permission from a third-party provider or a government in order to transact. And so, you know, denial, it's pretty much a no to that, you know. And so, like I said, if they actually get people to sanction those addresses, people are going to have to really think hard about their own interests in cryptocurrencies, whether or not they would comply with that request. However, I indicated on Twitter that if they sent me coins, I would not deny them, because that's not what this network is about. It's about being able to send money from you to anybody else on the planet within approximately 10 minutes, plus or minus an hour or two, depending on the block demand for that time, but that you could get it finally settled by the time you received your first confirmation. And that to me is the power of Bitcoin. It's not blockchains, it's not shit you can stack on top of it, or what you're building for it. It's using it as money. That's what it was meant for. Peer-to-peer cash. Says it in the white paper. I know fucking Roger pissed all over that white paper with what he's been trying to do with Bitcoin Cash, but you know what? That's his own shit. And just as Blockstream isn't the totality of Bitcoin, neither is Roger Ver. You know? Just because he shit on the white paper doesn't necessarily mean the white paper is bad. It just means Roger shit on it. That's all it means. Anyway, let's go ahead and throw down into some music. And I think this one's kind of appropriate. X-Ray Visions, First Dance, here on Coin Metal. I would have let that keep going because it's a really great song, but we would have been like way, way, way too deep. As a matter of fact, Push It was one step too deep for me, but I still love that song, so I had to let it roll. Anywho, as far as what we're getting into today, I haven't really gone on anything. I mean, it's kind of exciting that Bitcoin has finally seen a little bit of appreciation this week so far, and it's kind of good to see it finally above 4,000 again, which is cool. Anyway, I do have this article here, and this one is really interesting to me because Goldman is heavily involved in cryptocurrencies. They have been since, I want to say about 2013, 2014. As a matter of fact, they're a chief funder of Circle. They purchased Circle a while ago, and so it's kind of interesting that they should be involved with that, and they're also behind USDC. And what's funny about that is that USDC has not had its reserves confirmed, and I think that's kind of important, especially when we're talking about the federal government of the United States, or any other government for that matter, trying to get involved in regulating cryptocurrencies, because it's like, the SEC gets on ICOs claiming that they are securities, right? Well, if a ICO is a security of Ethereum, doesn't that make a stable coin a security of the US dollar? Because it's supposedly representing a volume of US dollars, right? So, and it's not the real thing. It's a derivative off of the US dollars themselves. So that kind of classifies as a security. And so why they aren't going after, or maybe they are, I don't know. I would imagine that Gemini is probably compliant. They really don't have any choice. They are in New York. So it's like, if they want all the cushy relationships that they currently have, and they want the favorable rates and the favorable treatment that they're currently receiving, they're gonna be compliant. Now, what that'll mean for the rest of us, I don't know. But anyway, continuing on, I got this article here on ccn.com. Goldman Sachs still can't hold crypto on behalf of clients despite growing demand. I certainly haven't asked Goldman Sachs to hold any crypto for me. Anyway, continuing on. Nearly 3 months have passed since Goldman Sachs, a $73 billion investment bank based in the U.S., said that it is not ready to facilitate the delivery of, quote, physical Bitcoin to its clients. What? The banking giant is still not able to hold cryptocurrencies on behalf of its clients, despite growing demand from its clients. At a conference in New York, Justin Smith, the head of digital asset markets at Goldman Sachs, said, quote, "One of the things they ask me is, quote, can you hold our coins? And I say, no, we cannot. One of the things we have to take into consideration when we're building out our business is what we can and cannot do from a regulatory perspective." When can Goldman Sachs enter the Bitcoin market? They're already here, dude. What the fuck are you talking about? Goldman Sachs has been facilitating investments into Bitcoin futures for its customers for a while. In an interview with Bloomberg TV in China for the first time, Goldman Sachs CEO David Solomon directly confirmed that the company has been clearing Bitcoin futures contracts since June. Quote, "We are clearing some futures around Bitcoin, talking about doing some other activities there, but it's going very cautiously. We're listening to our clients and trying to help our clients as they're exploring these things too. Goldman Sachs must evolve its business and adapt to the environment." The US-based bank has already entered the cryptocurrency market and has been assisting investors to trade Bitcoin in the futures market. However, Bitcoin futures markets that are currently in existence in the US market do not promise the physical delivery of Bitcoin, meaning investors are not technically buying Bitcoin from the futures markets, but rather contracts that reflect the price of the dominant cryptocurrency. Bakkt, the cryptocurrency trading exchange developed by ICE, the parent company of the New York Stock Exchange, is set to open a futures market in January that delivers physical Bitcoin to its investors. But as of now, no regulated U.S. market holds cryptocurrencies for its customers. Okay. For Goldman Sachs to hold cryptocurrencies for its clients, it needs regulatory approval to operate as a regulated and trusted crypto custodian. Several companies like Coinbase and BitGo have implemented unique methods to be approved as a custodian. BitGo, for instance, launched its own regulated custodian, BitGo Trust. Goldman Sachs executive Justin Smith said that custody is an important component which the bank lacks, and without regulatory approval, it will not be able to directly hold digital assets for the bank's client base. Quote, "Custody is the foundational piece that is absolutely necessary. Custody is part of an overall integrated system where different parts need to work well with each other and safely with each other, and you have to be able to trust all of the different parts in that chain, from buying something to transferring it to storing it in for the long term," added Schmidt. Clients are asking. As Schmidt said, clients at Goldman Sachs have begun to ask the bank to provide custodian solutions to protect their investments in digital assets. Over time, as the space finds more regulatory clarity, the bank could find an appropriate time frame to begin operating as a custodian. But as of now, Goldman Sachs believes it is not ready to do just that yet. Let's see here. RDD says they can find a way to do what their clients are asking, it would end them. So they can't find a way to do what their customers are asking because of legalese. No. I don't believe it would end them to do such a thing. See, it's just a difference of the currency. You know, the unit's different. It's not a US dollar, it's not denominated for US dollars. The big risk for custodians is that their position will be abused by either themselves or one of their intermediaries, or one of the people that they use as clients, one of the people they use as partners, whoever has access to the money, basically. And one of the things that I imagine they would have difficulty with is, as custodians, they could count their current reserves as an asset on a separate balance sheet that they could be maybe issuing their own tokens against and selling them to their customers, or a customer outside of their normal customer base, or somebody, I don't know. But the point being is, they could, as custodians in the traditional sense, they have the ability to basically issue additional what's that word, obligations on top of the funds that they already have. They can use it as collateral for shit, and that's cool when you're FDIC insured, and the Federal Reserve or whoever is willing to back you up in the event of a catastrophic failure, as we saw in 2009. However, you don't have that luxury in Bitcoin. There are only so many Bitcoin in existence. There will only ever be so many Bitcoin. So, if you fuck up as a custodian and somebody manages to snatch the Bitcoin, not only have you lost your customer's Bitcoin, but you're going to have to A, rebuy the Bitcoin to compensate your clients at the current market rate, which will probably be much higher than the initial rate that you paid for it. And so there's the loss there, but there's also the issue of there's also the issue of the fact you can't have the reserves for it. I mean, you could have reserves, but then again, what would a large sum of Bitcoin constitute? It would constitute a honeypot waiting for somebody to figure out a way to access it. And this is the big risk as being custodians. It's like the risk they would take if they were taking the funds or the commodities were, say, gold or silver or physical platinum or some other precious metal, right? Or artwork or something that is irreplaceable. Or at least that the expense of replacing it is prohibitive. So their big issues I can see are that they can see that the model really doesn't need them. And they're trying not to foster it by giving it more business, and shifting more capital into the crypto space. But I think that's short-lived. There's the promise of Lightning networks and acting as a funder for large payment channels, that you could route to whoever, I mean, if you had an entity like Goldman Sachs running their own side chain and doing payment channels on that, they'd probably be able to compete with a lot of the existing and future people trying to get into that space and develop another monopoly there. And this is the danger that I keep trying to communicate to people on Twitter, where you just don't seem to understand that risk exists when you're separating out away from the Bitcoin blockchain and away from being able to directly interface with it with on-chain transactions. You're going back into Trustville. And it looks really nice and shiny now, but they're technically not in quote-unquote production. I mean, they're getting there. They're getting more users and whatnot. But I think it will only get so large before it starts looking like a very big attack vector. There's going to be concentrations of Bitcoin on it, and people are going to be trying to snatch it. For the most part, they've been in a non-adversarial relationship with the nodes. I haven't heard of any major fuck-ups on there yet. But that's not always going to be true. At least I don't think it will be. And, yeah. Anyway, I see this article, and this one seems kind of fun, I think. It's on CoinGape.com. Petition, quote, stop Bitcoin from dumping lower to SEC and Federal Reserve emerges amid Bitcoin crashes. And this is by Anjali Tyagi. Let's check something out here real quick. No penis. Continuing on. This is authored approximately an hour ago. The crash of Bitcoin to 4K and wipeout of $700 billion from the crypto market has led a crypto enthusiast and trader to start a petition called Stop Bitcoin from Dumping Lower on change.org that has received 200 supporters. Make it stop! Crypto community asking for help. Well, looks like the crypto community is up for any help they can get. Things have taken quite a quirky turn as Mansa underscore Godson and altcoin OG trader, Bitcoin accumulator, coder, and founder of Mutual Capital, a crypto cooperative, and as per his Twitter bio, has stated a petition as Bitcoin tanks and the crypto market crashes. Started about 3 days back, he stated, quote, "I started a petition. We can't let this continue." The petition to stop Bitcoin from dumping lower has been created on change.org. The petition is directed towards the SEC, Federal Reserve, Angelo BTC, a crypto trader, and Wolong. Stop Bitcoin from dumping lower. Yeah, whatever. The problem conveyed in the petition is, quote, "Why it keep going down?" Why it keep go down? Bitcoin prices dropped 80% from its all-time high. On the weekend, it went below $3,500. While analysts are saying 1K is a real possibility, so more pain seems to be ahead for the crypto market. In tandem with Bitcoin, altcoins have taken a rather sharp fall, resulting in the loss of about $700 billion in total market cap from its peak. As for the solution, the petitioner provides, quote, "Make it stop, sir." Well, that's quite straight and to the point. It is even a personal story attached, quote, "I don't think I make it up, help," that many crypto enthusiasts and investors can definitely agree and familiarize with. The petition has received support of 200 plus people and further extended its goal from 200 signatures to 500 now. What do you think of this petition? Would you be signing it for help? No. Fuck you. You should have known what you got into when you bought. And if you didn't, too bad. The SEC can't help you, kid. Yeah, I caught the title of that, and it included the SEC, so I'm like, oh, that's got to be kind of official, right? No, guess not. I mean, but it's kind of funny. You would expect that kind of response from, people that don't really understand markets and don't really understand what they're doing in cryptocurrencies. Sad. That not how any of this work, kid. Anyway, I just got onto Bitcoin.com looking for something else, because the Twitter feed seems a little rarefied today. I don't know what's up with that. Got to go mining for it. Markets, bull trap, blah blah blah. SEC. Ooh, what's that? Huh. Ooh, this one's from the future. It's from November 29th, 2018. Under regulation. Holy shit, and it was authored 13 hours ago. This guy's way in the future. Kevin Helms. So yes, penis. SEC chair explains what key upgrades needed for Bitcoin ETF approval. The chairman of the U.S. Securities and Exchange Commission, SEC, has outlined the key changes in cryptocurrency markets he needs to see before he is comfortable with a Bitcoin ETF. While some solutions to the problems he mentioned have already been implemented, the chairman insists on seeing more improvements. Whatever. Key upgrades needed. At the Consensus Invest conference on Tuesday, SEC Chairman Jay Clayton explained what he needs to see before the SEC can consider approving its first Bitcoin exchange-traded fund. According to CNBC, Clayton said he, quote, needs to see key upgrades in cryptocurrency markets before approving a Bitcoin ETF. Specifically, the SEC chair, quote, wants to see better market surveillance and custody for cryptocurrencies before being comfortable with a Bitcoin ETF. The news outlet added, quote, the news outlet added, better market surveillance. The first issue Clayton noted was the lack of market surveillance at crypto exchanges. Market surveillance includes the use of systems that, quote, monitor, prevent, and investigate abusive and manipulative activity on the exchanges, the publication described. The chairman explained that stock exchanges such as the New York Stock Exchange and the NASDAQ already have these monitoring tools in place. However, quote, those kinds of safeguards do not exist currently in all of the exchange venues where digital currencies trade, he affirmed, asserting, what investors expect is that trading in the commodity that underlies that ETF makes sense and is free from the risk of manipulation. You're fucking high, dude. It is an issue that needs to be addressed before I would be comfortable. Yeah, whatever, Jay. Not all crypto exchanges lack market surveillance, however. In April, NASDAQ announced that crypto exchange Gemini, quote, will be leveraging NASDAQ's Smart Market surveillance technology to monitor its marketplace. NASDAQ claims that its technology, quote, is considered the most widely deployed surveillance system in the world. This agreement followed the SEC's rejection of the rule change proposed by BATS BZX to list and trade coin ETF. The commission cited BATS BZX's lack of surveillance sharing agreements with significant markets for trading Bitcoin or its derivatives as one of the reasons. On Tuesday, Europe's largest crypto exchange by trading volume, Bitstamp, announced that it is implementing a monitoring platform provided by market surveillance provider Irisium. My apologies. Inadequate custody. Clayton is also concerned with how safely crypto assets are stored, emphasizing that investors could be exposed to the risk of theft in ETF's underlying assets. Duh! A number of custody solutions have been explored by companies such as Fidelity Investments, Coinbase, Gemini, BitGo, Itbit, Japanese bank Nomura, Goldman Sachs, Northern Trust, and South Korea's Shinhan Bank. Nevertheless, the publication quoted Clayton as saying that custody solutions, quote, still need to be improved and hardened. The chairman elaborated, quote, we've seen some thefts around digital assets that make you scratch your head. We care that the assets underlying that ETF have good custody and that they're not going to disappear. I don't really understand the concern here. Specifically because cryptocurrencies, if I transfer them to you, you've got custody of them. So if I'm enlisting, if I'm enlisting the NASDAQ to hold on to my funds, or allow me to trade with my funds on their exchange, I would have to scan their receive address and send it to them, and then they would have it. Whether or not they were actually willing to honor their duties and hold on to them properly and keep them from getting stolen, that's a whole different question. And it's on the market themselves. It's not something that's on us. And I think that's one of the bigger mistakes this guy's making, is that's where the difference is with custody. Okay, I mean, it's not, I don't have to hire a Brinks truck to come here and pick up pallets of cash to take to a Goldman Sachs bank to be imported into my account. If I had the same amount of Bitcoin, I could have it on my fucking cell phone. I could call the guy up and fucking send it to him. I could instant message it to him. There are 1,000,000,001 different mediums that I could securely send him any amount of fucking money he wants. Minimum 250,000 in? Okay, no problem. Give me a receive address and I can scan the funds to you. And not a representation of the funds, I mean the actual funds. When you look on the blockchain, you will have possession of the funds. And that's one of the other issues with them, is the keeping track of shit. records. Well, I mean, you don't have to do that with a transaction that's happening on the blockchain. It's fucking happened. I can prove that I've sent it to you. We can watch it get its confirmation on the blockchain. So that there aren't the trust issues have changed, and I'm surprised with the fact that he would take into consideration the theft of the underlying asset. And actually, that was Goldman Sachs, I think, that brought that one up. And that is a threat. But if you consider the ways that it happened, usually there's significant warning beforehand. We had, like, I think it was BitThumb. They had several security audits where they were warned that they had some sort of issue, and no problem, yeah, we'll take care of it, and they never took care of it. And then they got hacked, and they lost, like, I think it was like $60 million or some shit like that. But that's a failure on the part of the custodian. Now, what's this guy trying to say? It's like they're bringing up Goldman, and they're bringing up NASDAQ and down all these wonderful names with regard to supposed legitimacy in the market, right? Even though they're busted in non-compliance perpetually. But, you can't make an omelet without breaking some eggs, I guess, right? Or defrauding some customers. But in the question of trust, again, it's taken out. I mean, if I can monitor the funds on the blockchain, I set up an alert on my browser, lets me know whenever my funds are moved, right? If I'm not the one moving them and they move on their own, I can tell that somebody at Goldman just stole my fucking money. Either that or they're moving my money from one account to another. And that might be fine if they're doing it on my behalf, within their system or something like that. But then again, you probably wouldn't want to be tracking those particular transactions on a public quote-unquote blockchain. So, and of course they do have custody solutions for transacting the money from one account to another within your own sphere, and you can do that with a quote-unquote sidechain with all that Lightning Network BS. Not that that's actually necessary. You could just as easily be counting it in representations on a database and not actually be touching the funds at all, not having the funds live at all. You could have them in cold custody, in cold storage, printed out on a sheet of paper, locked away in a fucking safety deposit box or something, and nobody's going to be getting to that. And if somebody does get to it, it will be due to some sort of failure on the part of the custodian. And like I said, this has always been an issue with regard to insuring Bitcoin, because in the event that a theft or something like that happens, you got to recompensate the people what they lost in the form that you lost it in. So if you lost it in Bitcoin, like I said, you have to go back to the retail market and buy more of it for your customer. So there are trade-offs there. Is it really worth it to you to hold a form of money that you can't just go to the Federal Reserve and say, hey man, somebody fucked up, they fat-fingered and snatched $250 million out of somebody's account, and so we need $250 million like stat. Or what? No, I think the upper limit on that is $250,000. Although I'm sure they make some sort of exception for enterprise class traders or some shit like that. But the point being, like I said, you can't do that. Even if it was like in Doge or something like that, you would have to go to the retail market to cover for the funds lost. And as far as getting the addresses blacklisted, I saw that on my Twitter feed today, where I guess it was the SEC was proposing sanctioning a pair of addresses. Give me a fucking break. If they're sending money to you, are you going to say no? They just sent you money. Thanks. Bye-bye. You might be that less inclined to fulfill on the obligation because these guys are supposedly, bad people. But I mean, who are you to judge? Does the US dollar stop working just because it's held by a quote-unquote criminal? No. It works just the same. So why should Bitcoin or any other cryptocurrency be any different in that aspect? Because as soon as it is used in that way, cryptocurrencies are going to lose a great deal of their appeal, or at least the ones that can be manipulated in these ways. The ones where the networks are saying, no, we're not going to allow that kind of behavior on our fucking network, are going to allow the funds to be there, and people are going to continue to transact with them. And where there isn't a market for it, somebody will create one, or somebody will create a tool for it. This is a perpetual game of cat and mouse. And the less effort you put in trying to capture it and monitor it and regulate it and license it and fee it and all that other bullshit, the more productive it's going to be for everybody. And of course, the less energy you will be wasting. That was another thing. I forgot to mention that when I was talking about my session of jiu-jitsu today. I was trying to be even more conscientious than normal about my energy consumption. And so like that single leg takedown, I only got that because I was trying to conserve my energy, and so I disengaged my legs, right? Well, it's just as easy to turn that into a positive situation, and that's exactly what I did. Anyway, let's go ahead and throw back down into some music, and I'm feeling the need for some Skindred, and I love this song, so here it is, Nobody, here on Coin Metal. And that was Anthrax with Fight 'Em Till You Can't. Of course, that's about zombies and killing zombies and all that other business, but you never know. Could apply to others. Could be a metaphor. Anywho, I got this article here on Wall Street Journal, and we were talking about this a little bit earlier. U.S. targets Iranian hackers for laundering Bitcoin in connection to major ransomware attack. This is by Ian Talley and Sadie Gurman. So yes, penis, and no penis. This is updated November 28th, 2018 at 6:46 p.m. Eastern Time. Washington, U.S. officials say they would sanction 2 Iranians and seek the prosecution of 2 others for the, quote, Sam cyber attacks that allegedly hacked into servers at hospitals, schools, ports, and other institutions, then demanded Bitcoin as ransom and laundered the money through online exchanges. Brian Benkowski, I guess, head of Justice Department's Criminal Division, said the conspiracy represented an extreme form of 21st century digital blackmail. The Treasury Department said it hoped the action would help set new standards for the digital currency industry, including exchanges where the U.S. alleged the ill-gotten gains were laundered before being converted into hard currency. U.S. officials, cybersecurity experts, and security analysts are concerned about the migration of money laundering into the digital currencies as sanctioned governments, black market arms dealers, human traffickers, and other criminals seek to tap their potential anonymity to hide their illicit gains. The SamSam conspiracy, described by cybersecurity experts as one of the most effective ransomware schemes on record, allegedly hit more than 200 institutions, including Hartsfield-Jackson, Atlanta International Airport, the Port of San Diego, and Colorado Department of Transportation. The Justice Department alleged that 2 Iranian hackers, Faramars Savandi and Moammar Misri, shut down the computer systems of these and other institutions and demanded Bitcoin payments to open them up again. It said the scheme netted more than $6 million in ransom and caused economic damages of more than $30 million. The two alleged hackers couldn't immediately be reached for comment. Yeah, they're probably too busy running right now. The Treasury Department sanctioned Iranians Ali Kharshadzadeh and Mohammed Ghorbanyan for allegedly laundering the ransoms through cryptocurrency exchanges. Emails and addresses provided by the Treasury Department for the two men didn't work on Wednesday. Prosecutors said the conspiracy appeared to be for personal enrichment and not linked to Iran's government. Treasury's action marks the first time the U.S. has used digital currency addresses to identify sanctioned targets. It also marks a new step by the U.S. to impose regulatory requirements on digital currency exchanges that can be used to mask illicit activity. In issuing these sanctions, the Treasury said exchanges are now expected to monitor their platforms for sanctioned individuals and other suspicious activity, and then report it to the U.S. government when it occurs. The U.S. digital exchanges handling transactions for sanctioned entities in the future risk major fines, while foreign exchanges could be frozen out of U.S. markets, Sigal Mendelker, Treasury's Undersecretary for Terrorism and Financial Intelligence, said in an interview, quote, "This action should reverberate across the digital currency community," she said. "It is critical that financial institutions, including these exchanges and other providers of digital currency services, guard against the risk of malicious actors securing their illicit gains." Dude, like, that doesn't fucking happen every single day in fiat currencies. Give me a break. Last year, the Treasury's Financial Crimes Enforcement Network levied a $110 million fine against BTC-E, a Bulgarian digital currency exchange, that U.S. officials said facilitated computer hacking, fraud, identity theft, public corruption, and drug trafficking in transactions that totaled more than $4 billion. In this case, it isn't clear whether the two individuals charged by the Justice Department with the SamSam hacking scheme will see the inside of a U.S. courtroom, given tense relations between the U.S. and Iran. Meantime, these sanctions imposed by Treasury freeze any assets that the other two blacklisted men may hold within U.S. jurisdictions and could complicate their international financing and travel. U.S. officials and cyber experts say Iranian hackers are increasingly turning to digital currency platforms and cyber hacks to make and move money amid the reimposition of tough U.S. sanctions. Recent researchers with Accenture's PLC iDefense cybersecurity unit said in August they had tracked 5 new types of ransomware originating in Iran. You know, I swear that the problem that's happening here is not with cryptocurrencies. It's like the gun argument, right? Where if there's some asshole takes a gun somewhere and shoots a whole bunch of people, everybody wants to blame the gun, or at least some people want to blame the gun. Sane, rational people blame the person holding the gun, right? Well, it's the same thing here with cryptocurrencies, where you're holding them to a little different standard, or a higher standard than you do U.S. currencies and units of exchange, such as stocks and whatnot. There's all kinds of manipulation. There's all kinds of thievery going on out there on regulated markets. We read about it all the time on this show. Fucking LIBOR rates between interbanks and all that. Dude, don't tell me it doesn't exist. It fucking exists. So to be putting this kind of pressure on cryptocurrencies, I think is especially offensive. But the title was misleading, right? They're suggesting that somehow the U.S. government can stop these two men from receiving cryptocurrencies by banning their addresses. Give me a fucking break. They've already liquidated the funds out to fiat, so what's the point of all your monitoring and tracking now? It's not like they're going to be sending you more money or receiving more money to that address or trying to receive more money to those addresses. If they've already liquidated the funds out to US dollars or reals or whatever the fuck, the crime is already committed. The damage is already done. If you can get Iran to give up those two guys, good for you. But let's take some stuff into account here, shall we? What about cryptocurrencies made this any less of a crime on the part of these guys? They held computer systems at ransom. They took payment for releasing those computer systems, and then they absconded with their funds. Now, how is that any different from any kind of cyber terror or cyber ransom case that may have come before? And I'm sure there have been plenty. How would it be any different? Theft is theft, fraud is fraud, extortion is extortion, ransom is ransom. And so when people are calling for more quote-unquote regulatory clarity, I don't really know what to tell you people. Because there's never been a more transparent form of currency than cryptocurrencies, than Bitcoin and other cryptocurrencies. There's never been such a thing as a transparent global network of ad hoc participants, volunteers. It's never existed before. And just because it's being used in some activities that a government may find quote-unquote illegal, it doesn't mean that it's the tool itself that's at fault. As far as I'm concerned, most of the time it's just facilitating otherwise legitimate commerce. You know, such as in the case of the Silk Road. People were getting their drugs, people were getting their money, everybody happy. That's what you need for commerce to happen. Now, U.S. government not happy, but you know what? Too fucking bad. It's not like the U.S. government doesn't do plenty to import and manufacture drugs here in the United States, or at least facilitate it happening. So, to be pointing at any particular market and shaking a finger or whatever, I mean, come on, look around you. The whole war on drugs is collapsing all around you. What did Silk Road really teach us? It really taught us, the real lesson anyway of Silk Road, is how light and how efficient 21st century commerce can be if we simply step out of the way and allow it to happen. Now, as I've said multiple times on this show, what determines where it happens and who is involved in it, of course, at this point is state and federal governments. And their willingness to try and put exceeding pressures on it. Now, the best of all worlds can be derived, as far as I'm concerned, by letting the fucking thing go. Don't try and apply your bullshit regulatory structures that you have on fiat markets. Because you can just create those out of fucking thin air if you really had to. If an emergency situation came up where, for whatever reason, you needed to create more money, you can do that with fiat currencies. This isn't to suggest that the process is fully unaccountable, because the bill is always due at some point. But it does allow you to kind of shuffle it off to the side for a little while, at least longer than you would affordably be held to account for whatever happened with the funds. And, you know, as long as you can escape the fallout, you're good, right? Well, you can't do that in cryptocurrencies. The stimulus to response is much quicker here, because there's far more eyes on what's going on here, because it's within our interest to be that interested. And I know that seems a bit onerous and whatnot, but you know what? The fact of the matter is I came into this stuff with the technological aptitude of a glorified button pusher. I mean, I had done some web stuff and all that, but nothing really big. And then this shit came along. and here I am doing international radio. What a wild world, right? Anyway, this next article I got is on Coindesk.com. Botnets are being repurposed for cryptocurrency mining malware, Kaspersky. Gosh, they finally caught on to this shit, huh? This is by Aditi Hudley, and I don't even know, but let's check and verify where we can. Oh, come on. No information. I'm just going to say no penis, because I don't know who Aditi is, but we're going to we'll find out at some point or another, I'm sure. Continuing on. A security bulletin released by Kaspersky Labs states that botnets are increasingly being used to distribute illicit crypto mining software. In the note, analysts for the cybersecurity firm said Wednesday that the number of unique users attacked by crypto miners grew dramatically in the first 3 months of 2018. Such malware is designed to secretly reallocate an infected machine's processing power to mine cryptocurrencies, with any proceeds going to the attacker. According to Kaspersky, more users were infected in September than in January, and, quote, the threat is still current. Though it is unclear whether the recent collapse in the crypto market's prices have been an impact on the infection rate, the firm's analyst said that a noticeable drop in distributed denial of service attacks may be attributed to the, quote, reprofiling of botnets from DDoS attacks to cryptocurrency mining. As the note detailed, quote, evidence suggests that the owners of many well-known botnets have switched their attack vector toward mining. For example, the DDoS activity on the Yo-Yo botnet dropped dramatically, although there is no data about it being dismantled. A possible explanation for cybercriminals' increased interest in cryptocurrency mining may lie in the fact that once the malware is distributed, it's difficult for the victims and police to detect. Of the various types of software identified and cataloged, most reconfigure a computer's processor usage to allocate a small amount to mining, keeping the users from noticing. The organization further looked into reasons for the prevalence of this type of malware in some regions over others, concluding that regions with lax legislative frameworks on pirated and illicitly distributed software are more likely to have victims of cyberjacking. U.S. users were the least affected by the attacks, constituting 1.33% of the total number detected, followed by users in Switzerland and Britain. However, countries with lax piracy laws like Kazakhstan, Vietnam, and Indonesia topped the list. The more freely unlicensed software is distributed, the more miners there are. This is confirmed by our statistics, which indicates that miners most often land on victim computers together with pirated software, the report said. Yeah, okay. So, I would say that there's another reason for it, that there's a growing desire to participate in these markets and with these cryptocurrencies. And if you don't have access to your own hardware, but you have the aptitude to steal the resources of somebody else's, what are you going to do? You're going to mine with somebody else's machine, because it's within your capability to do. Now, what you have to wonder there is why people would do that. Okay, there's obviously a reason. My feeling is the expense of mining gear. That for many people it's become too expensive to participate on a legitimate basis. And so that, as I see it, will be resolved in due time. As I believe that we are due for another alt bloom. And I think it'll be facilitated by Bitcoin. That Bitcoin will go up in value to an extent that you won't be able to transact it on chain very easily. And so that'll push more interest into altcoins that you can directly exchange on chain. But that's just my feeling. I mean, and that's what did it last time, you know. And because we haven't actually really increased the block size since then, I expect that it's going to happen again, because some people just haven't learned that lesson yet. Anyway, let's see here. And I do have another article that we're going to cover. I wanted to make sure I didn't have any more additional ones about this. U.S. sanctions first Bitcoin addresses. Yeah, let's get into this one. I think this is kind of an entertaining subject. Let's see what they're expecting here. This is by Melanie Kramer, November 29th, 2018. So yes, from the future, and no penis. Involvement in the SamSam ransomware attacks. The OFAC stated that the two Iranian-based individuals are Ali and Mohammed, and I'm not going to try and read their last names. Sorry, gentlemen, it's just not in my tongue to do it. According to a U.S. Treasury press release today, they helped exchange Bitcoin ransom payments obtained by, quote, Iranian malicious cyber actors involved in the SamSam ransomware scheme into Iranian rial. Well, I guess that would indicate who they are, right? Quote, having materially assisted, sponsored, or provided financial, material, or technological support for, or goods or services, or in support of the SamSam ransomware attacks. The OFAC has identified and published the two wallet addresses associated with the facilitators. The cryptocurrency wallet addresses processed around 6,000 to 7,000 Bitcoin in transactions across 40 cryptocurrency exchanges. Even at today's Bitcoin price, this would equate to a value of over $25 million. The U.S. Department of Justice has also indicted two actors for infecting over 200 networks with SamSam ransomware in the UK, US, and Canada since 2015. One hospital in India lost all its IT networks during storms, leading them to pay the ransom to protect patients. The news quickly sparked conversation on social media, blah, 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 blah. First publishing of wallet addresses. OFAC says that although it usually shares identifiers with designated people, today's action marks the first time the OFAC is publicly attributing digital currency addresses to designated individuals. The operators recognizing or finding the published wallet addresses are required to comply with the OFAC obligations regardless of whether the transactions are conducted in fiat or digital currency. Quote, like traditional identifiers, these digital currency addressers should assist those in compliance and digital currency communities in identifying transactions and funds that must be blocked and investigating any connections to these addresses. Give me a fucking break, dude. It's already over. Any property or financial interests of the individuals are now subject to OFAC sanctions, and U.S. persons generally are prohibited from dealing with them. The Treasury and OFAC actions today are part of a wider round of sanctions and U.S. economic pressure targeting Iran, designed to blunt the broad spectrum of the Iranian regime's malign activities and compel the regime to change its behavior. Like what? What exactly are they doing that's meriting this bullshit? Treasury Undersecretary for Terrorism and Financial Intelligence, Sigal Mandalkar, warns, quote, Treasury will aggressively pursue Iran and other rogue regimes attempting to exploit digital currencies and weaknesses in cyber and AML-CFT safeguards to further their nefarious objectives. What are your thoughts on the new sanctions? Let us know in the comments below. Let's see if there's any comments. Oh, show comments. Maybe? Nope, no comments. Damn it, Jim. Well, like I said, we covered from the previous article the fact that they've already got these out to Iranian rials. So, blocking their addresses further, it's not really going to do you any good. They could just as easily delete those wallets after they've swept them, and that's it. And from all indications, they traded on 40 different exchanges. Chances are they swept all of those funds. They put some here, some over there, and they got rid of it all in one swat. Probably had the whole transfer done to rials in less than a business day. I mean, that's a pretty impressive yield. And I'm not saying that to try and encourage that kind of behavior, because I think it's kind of counterproductive. But it shows you a shift of incentives. Okay, because these people had the technical aptitude to do what they did. They used that to facilitate a quote-unquote crime, and by all accounts it was a crime, instead of applying it to a more productive use, such as mining, and earning the money legitimately themselves. And so, like I said, this is going to be addressed by cheaper mining gear and a higher reward for participation. And I expect that to happen pretty damn soon, really. That the relative value of cryptocurrencies versus fiat currencies, I expect some shifts going on. Significant ones. And it's not going to be dependent upon BACT or any of that other bullshit. It's going to be just a greater interest in cryptocurrencies and wanting to use the freedoms that are facilitated by them. And not just Bitcoin. You know, I think that this shift in the U.S. government to targeting Bitcoin addresses might actually spur additional interest into altcoins, specifically altcoins that can't be as easily tracked. You know, it's kind of an obvious progression, rather, that kind of thing would be happening. You know, you squeeze here, the pressure moves the participation elsewhere. It doesn't stay under your control. And as a matter of fact, it's kind of obvious now, not just to us, but a lot of other participants in global markets, that cryptocurrencies are in fact here to stay, and that this is kind of the progression of money. And just to cover that, I got this article here on CNBC, and they're usually like the counter indicator of counter indicators, but we'll go with it anyway. Bitcoin and digital assets are here to stay, says NYSE chairman, despite bear market. And this is authored by Kate Rooney, published 3 hours ago, according to what I'm looking at here. So no penis. Bitcoin got the backing of a critical figurehead on Wall Street this week. Jeff Sprecher, chairman of the New York Stock Exchange and CEO of its parent company, Intercontinental Exchange, said that despite headlines of cryptocurrencies flopping, digital assets have a future in regulated markets. And notice they say digital assets. They're not talking about cryptocurrencies now. They're talking about something else. Continuing on. When asked about the dropping prices, Sprecher brought up a perennial question posed by critics. Quote, will digital assets survive? Will cryptocurrencies survive? Quote, the unequivocal answer is yes, he said on stage at the Consensus Invest conference on Tuesday. Quote, as an exchange operator, it is not our objective to opine on prices. Sprecher's Intercontinental Exchange, along with Starbucks, Microsoft, and BCG, is backing a new company called Bakkt that will facilitate Bitcoin futures trading by the first quarter of next year. The initial launch was set for November of 2018, but the company announced last week that it would push that debut back to January. Kelly Loeffler, Chief Executive Officer of Bakkt, gave some details on the decision. She explained that the original timeline was ambitious and the customer pipeline filled up quickly. Quote, "To give it the best chance for success, we pushed it back to the holidays to give people more time to get on board," Loeffler said. Quote, "It's a positive indication of the interest, and it gives people time to learn. We have a responsibility to do that, so we're taking that extra time." Bakkt is starting with Bitcoin, which is regulated by the Commodities Futures and Trading Commission. No, it isn't. They say it is, but it isn't. The company's role, as Loeffler explained it, is to provide custody and price discovery for Bitcoin that's free from fraud and manipulation. Prices now tend to fluctuate depending on the exchange, which in many cases are unregulated. Yeah, that's probably how it's going to stay, dude. Quote, "We're creating that infrastructure that doesn't exist today, which we think is a big opportunity for institutional investors to come in," Loeffler said. Another key difference is how the futures contracts will settle. Bakkt's Bitcoin futures will settle in Bitcoin. Existing Bitcoin futures on the CME and CBOE, which began in December, settle in cash. Those futures contracts this week hit their lowest prices since they began trading last year. The Nasdaq and VanEck also plan to launch Bitcoin futures in the first quarter of 2019. Bitcoin prices jumped as much as 16% on Wednesday after hitting a new 14-month low over the weekend. The world's largest cryptocurrency was trading around $4,300 as of 3:55 p.m. Eastern Time. Bitcoin as a benchmark. While it might not have the best technology of all cryptocurrencies, Bitcoin will likely emerge as the yardstick by which all others are measured, Sprecher said. Quote, "Somehow Bitcoin has lived in a swamp and survived." Sprecher said there are thousands of other tokens that you could argue are better, but yet Bitcoin continues to survive, thrive, and attract attention. Sprecher, who is married to Loeffler, likened it to the Dow Jones Industrial Average. The Dow, as it's known, is an index of 30 stocks that is price-weighted, meaning it gives higher-priced stocks more influence, but doesn't take into account the industry size or market cap. Quote, "The Dow has been around for decades. It's a terrible index. We could come up with an index that's more representative of our economy, but somehow that index will not go away," Sprecher said. Dow critics say it's not an accurate representation of market performance, yet it's the most widely used barometer. Similarly, Bitcoin has flaws, but Sprecher said it's likely to be the go-to cryptocurrency. Quote, "Oftentimes in finance, it's not about being the best. It turns out to be about being the broadest and most commonly accepted, and for whatever reason, Bitcoin has become that. Probably because it's been live since 2009. Continuously, unlike the Dow that takes time off during the weekends and shit." Yeah, I don't really have much hope for Bakkt. I think that they're probably going to end up getting wrecked. But that's just my interpretation of it. When you want to check out my opinions further on it, I actually did an episode called Bakkt, Wrecked Bakkt Securities or something like that. Yeah, I think that their transitioning over to cryptocurrencies is laudable, and fulfilling in cryptocurrencies. The ambition to do that is laudable, but that's usually something that's a lot easier in times when Bitcoin is going up versus fiat currencies than as opposed to times when it's going down. And I think that's one of the places where they're going to have a little bit of trouble, and especially if they start including more than one cryptocurrency to this gambit, trying to offset the losses on one with gains on another. This is a very, very fluid market. And people bitch about the volatility, but they don't really go into where the volatility is actually originating. And more times than not, it's due to an underlying issue with the fiat currency in question. It's not with Bitcoin or other cryptocurrency. I mean, usually we have little blips in prices and whatnot, but it's because we experience some sort of issue on an exchange or something to that effect, and it quickly corrects itself and resolves and continues going upward versus the US dollar. There's a little bit of a liquidity squeeze happening on the fiat currency markets, and I've got to wonder how that might affect the relative price of Bitcoin should the Federal Reserve or central banks resort to QE type of issuance, where they're dumping hundreds of billions of dollars worth of US dollars on the market. I've got to wonder how that might affect the relative price of Bitcoin. I've said multiple times that the price of Bitcoin in US dollars is far more dependent upon the actions of the Fed than it is on anything that's happening in cryptocurrencies. Because Bitcoin, it works on the block time of 10 minutes, right? And it's deterministic. It fucking happens on a relatively consistent basis. Once every 10 minutes there's a block reward issued. There's glitches here and there. Sometimes it's shorter, sometimes it's longer, but it averages just under 10 minutes per block. So now when you consider that against what's happening on the fiat side, where there's somebody in the back room who's evaluating the market, what they see happening in the market, and saying the best policy for right now is to increase the interest rate, or they have their own trading desk as well. So this big sell-off that we saw recently, that could have just as easily been precipitated by decisions of the Fed as anything else. The Fed could have been looking at the the prices for Apple and saying, that's way overvalued. Let's go ahead and liquidate 100 million shares, and suddenly the price of Apple tanks. The Fed got to make money too. They got to take profit too. And the markets feel it when they do, because they aren't moving just one or two coins. They're moving a shit ton of money. But it's having that position in the market that is counterproductive for the rest of the market. The issue with regard to pricing Bitcoin, or trying to determine a price for Bitcoin, if this last price spike didn't show you that's not really something you can do, then you really haven't been paying attention. You're going to have a real wide berth for your accepted losses, because if you don't, you're just going to get wrecked. And that's why I don't put a whole lot of confidence in these custodial firms and whatnot. Is that it's trying to place them in a position of trust in a system that's designed not to need people in positions of trust. And so it's like, that's always been a thing in cryptocurrencies. It's like, do I really want to give this guy my money? Is he going to give it back to me? I don't have to give him my money. I could hold on to my money and not even have to get a bank account to hold it in. I can hold it rather than somebody else. So now why am I going to go handing it off to somebody else expecting that they're actually going to give me my money back. I don't see the utility there. Why endure a risk that you don't necessarily have to? And I think that in the not so distant future, one of these more regulated and trusted exchanges is going to pull some shit. They are going to abuse the position of trust that they've been in place of, or placed it into by their customers, and they're going to understand. The customers are then going to understand the necessity and the utility of holding their own funds. However, I think the sanctions thing, where the U.S. government is deciding to try and sanction addresses, or at least the Treasury is trying to, I think that shit's silly. I just think it's silly. You're going to create a premium market for transferring from and to those addresses, where somebody will say, hey, yo, I'll be willing to transfer the funds, but, you know, I'm going to need a 5% premium because I'm enduring a lot of risk here, so on and so forth. Commerce resumes. And you got a whole planet full of people that are probably willing to do that. Anyway, let's go ahead and throw back down into some music. And I think this song is appropriate. The Contortionist, Causality, here on Coin Metal. And that was Soundgarden with Jesus Christ Pose. Man, that was at the head of that whole like grunge movement that happened back in the early 90s and kind of stuck with us ever since. It is with that, though, that I would like to close out this episode. You know, it's a funny world out there, and we've seen in the past where we've had these kind of little spasms of interest by regulators and whatnot in cryptocurrencies, and they're perpetually interested in us, but what they can actually do here, you know, what kind of pressures, what kind of powers they have over these markets. And we've seen this happen in different pressure points within crypto, and despite all of that, it's still here. And I expect that it will be well into the future. And I expect that these pressures won't necessarily dissuade people from participating, but might actually push them to develop other ways to circumvent the regulatory bodies and frameworks that have been established. As people will see these abilities as ways of preserving their own wealth. You know, not necessarily, you know, to be contrarian of their society or anything like that, but that they will be assuming actual control over their monetary value in a way that they haven't been able to for a very long time. Now, how regulating entities will react to that, and what kind of pressures they might try to flex in addition to the ones they've already got at their disposal, that has yet to be seen. But I remain assured in my own mind, at least, that the realities that cryptocurrencies bring to bear on global markets will more than likely outweigh anything that a government or other body could flex upon them. Because in the end, it is all dependent upon what we decide to use. And if millions of us are using, say, Bitcoin or other cryptocurrencies, that is a significant body of people, certainly more than the number of Canadians that exist. I know, that's kind of weird, but you know, the point being is there are more people involved in cryptocurrencies than live in Canada right now. Something to consider when discussing what kind of regulations we should allow in cryptocurrencies, what traction we should allow the state to have. Personally, I believe there is no additional traction needed. That in fact we have laws for ransoms, and we have laws for fraud and theft. We have regulations concerning custodians and what exactly their responsibilities entail. We already even have several regimes of, how should I say this? I want to say fees, but it's like if they're penalizing you, some sort of penalty system, those already exist. We already have that from legacy markets. The truth of the matter is we're still talking about monetary value. So when it comes to punishment, who deserves it, who metes it out, those things don't actually change. What changes is what kind of laws that can actually be applied. Things like sanctions, embargoes, on a monetary basis, I think this strength is going to go away. Because if it does become excessive on the Bitcoin network, somebody will develop a cryptocurrency that has no such handles on it. And people will migrate to transacting in that instead. It's not what it's actually worth to a regulatory body that matters. It's what the market values. That's what determines the realities here in crypto. And so when it comes to enforcement and whatnot, people are going to be looking at the enforcement activity and saying, now wait a minute, if we allow this on these Iranians, if we pursue this on these Iranians, what guarantees do I have that at some point or another a governing body might determine that I'm a criminal and apply those same sanctions upon me? Something to think about. Anyway, it is with that I'd like to close out this episode. We will be back again on Friday, and hopefully I'll get my fucking gi by then. That's what the postmaster says, but we'll see. Anyway, we will be back again on Friday at 8 p.m. Pacific Standard Time. And so until then, I'd like y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. Thank you very much for listening. I certainly do appreciate the support, and y'all have an excellent evening. As far as the last dance is going to be, here it is. Everything Ends by Slipknot. Last Dance here on Coin Metal. Thank you again for listening, and y'all have an excellent evening.